Good afternoon. George Cavaligos for HFT Bonds and Notes. Man, this stuff gets more and more interesting every day. We made new highs today in the March bonds. We did not make new highs in the June bonds. They matched yesterday's highs, I think. So you got some kind of reversal thing going on here. We had a lot of conversations today in the chat room. Thank you guys. Thanks, Ali, for getting back to me, man. I miss you a lot. Wish you were in the chat again with us. Moving on. Bonds and notes are putting in some of the strangest moves. I guess everything is. The central banks have gotten so deeply involved in the financial markets that it's just caused these tremendous swings in volatility, these tremendous swings in sentiment that, one day we're down, 20 handles in the S&P, the next day we're up 15, 18 handles in the S&P. Bonds are up 2 days ago, 1.5 points, probably 2 points from the lows in a matter of, a couple hours. Yesterday we put up a reversal candle. We made higher highs and then closed lower on the day. Today we go up and make a higher high and then close lower again today. I can't remember two back-to-back reversal days like that at new highs for a move. We had a little conversation about whether that's a key reversal or not. I looked up the definition, and it's a little bit of an uptrend here. We've had a move up, and we put up a higher high, and we closed lower. But we did the same thing yesterday. So I don't know, what is it? Back-to-back outside key reversals? Doesn't matter. Tomorrow's month end. Typically a friendly, somewhat bullish day for treasuries. Bonds and notes roll. Tomorrow morning on the pit open, June becomes front month. You're pretty safe trading the March contract through Friday. The algorithmic guys, it takes them a weekend basically to shift most of their software over to the June contract. So you'll see volume start to shift, quite sharply tomorrow. I think if you want, you're safe trading the March contract through Friday, and then over the weekend get updated to your charts, and then move into the June next week. Again, you should be watching both. Like I said today, the March bond made a higher high, and by a tick, I think. We all know about those one tick higher highs, don't we? Yes, we do. You always want to be shorting those one tick higher highs, or buy them and getting long on one tick lower lows. Whether you call it a failed auction if you're a market profile guy, or if you're an Elliott wave guy and you call it an irregular B wave, doesn't matter. If you're a trader, you can fade those moves, and typically they're fairly consistently profitable, or great risk reward trades. B waves that make new highs are called irregular B waves. Most B waves are followed by a C wave corrective pattern. Almost all of them, 99.9% of them. I highlighted the fact that when we saw it in the chat room, I said, okay, higher highs, now we're back in the range. Reeks of a B wave. You're supposed to be fading B waves. Looking for a retest of the lows. I wish I would have shorted the bonds instead of the notes. I had a great trade, okay, not a great trade. I had a good trade shorting the notes. Would have been a great trade if I would have shorted the bonds. Notes never met their objective, is retesting yesterday's high or low at 132.15. The 10 years low yesterday was 140. What was it? 145.11. Yeah, 145.11 was yesterday's low on the bonds. Not only did we test that, we took it out and went further. We went all the way down to what? 145 even. 144.30 is kind of a big level down there. We're bouncing a little bit off that support level right now. If it gets back up towards the previous lows at 145.20, I'll try to short the bonds. And if the 10-year gets down towards the previous lows at 135.15, I'll try to buy the 10-years. I think the curve steepening thing is back in kind of mode here, and I want to trade these moves that way. 10 years go down to 135.15, I'll try the long side. Bonds go up to 145.20, I'll try the short side. I think both would be good risk reward trades. Both could happen. Not at the same time, obviously, but both those moves could happen. All right, tomorrow, month end, typically bullish. So you want to see the markets bounce from these levels. It's also Thursday. We have the usual buyback. We have jobless claims. We have GDP revision, I think the second revision. We're also getting some PMI data tonight out of Japan. Really keep a focus on the yen. I think that move down in the yen is what caused the sell-off in the bonds today, more so than the rally in the equities. Tonight, I think the BOJ had the new guy is supposed to be formally nominated. I think that's what prompted some of the sell-off again in treasuries today. So those are the key events overnight. Tomorrow again, Thursday, month end. A lot of stuff going on, right? Got to be nimble. Like I said, I think you could trade this thing both ways, especially in the tomorrow. From that point, I think I'll be more inclined to be looking at selling rallies across the curve here on all these treasuries. 10 years reached pretty impressive rebound levels at the 618 retracement of the C wave sell-off. The bonds got right back to the previous fourth wave and stopped, the 147.10 area. 147.10 to 147.15, there's a massive cluster of resistance up there in the bonds. A lot of times on a rebound, you'll see the market stall against what was a previous fourth wave high. It's a very common objective. 10 years blew through it, obviously. 10 years have been strong. The curve steepening thing is really, really keeping the 10 years much better bid than the bonds. Okay, that's it. That's enough. Have a great night, you guys. I'll see you later. I'll take a look a bit later just to see what's going on the evening session. But the evening sessions have not been exciting lately. You know, we opened up a little bit weaker last night, and then it was just slow grind higher all night long on very light volume last night. So that's about it. We'll see you tomorrow. Have a great one. Thank you.